Hello everybody, welcome to the Technical Analysis webinar. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the session. As we get going, just give me a quick okay in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Looks like everything is up and running fine. If anyone runs into any issues as we go along, please let me know. So it's an interesting day. Slight positive momentum on the markets. Pretty low volatility, relatively speaking. And so nice, easy day in terms of movements on the charts, nothing too crazy. So it's actually been a nice day for some technical strategies. We'll take a look at some ideas and some of the assets to see what's been working today and what might still work moving forward. Keep in mind as we go through the strategies and the concepts and as we simulate trades that obviously no one trade is guaranteed to profit. And, when we go over things, it's from an educational perspective and not to be taken as financial advisement. The idea is to learn some methods, some ideas, both for managing risk, whether you're using stop loss, marks, hedge trades, or maybe using the AvaTrade Go app or the web trader platform, which has a nice feature called AvaProtect, which is a way of, for a small premium cost, protecting against losses for defined time periods. So in some way, it makes sense to manage your risk and to understand that no one trade is guaranteed. But in the end, we're all here because we understand that each and every trade does have a nice potential for profit. And so you want to go about things in a way that makes sense for you and, use strategies and methods that hopefully put you in the best position possible to profit long term. And so as we go over the technical analysis today, keep in mind that there are a couple different ways to go about technical analysis. One would be manual methods, which is what we tend to lean on in the webinars. And by manual methods, it means drawing your own lines, finding your own price levels, looking for your own trends, that sort of thing, by simply reading the candlestick charts. And for those of you that are new to things, if the basic idea of what is technical analysis is still relevant for you, the idea is you're just looking at the historical movements on the chart, the candlesticks, looking for patterns, looking for price levels that look significant in terms of the movements. And as you move forward with your trading, using that historical data to hopefully improve upon your entry points and exit points, as they do have meaning. The historical movements certainly have meaning, and we'll see that as we look at the charts. Now, as we go along, on occasion, we add indicators such as RSI or Fibonacci levels, whatever the case may be. These indicators are also reading those same movements. And that's why I like starting with the idea of manual methods in the webinars so that you understand what those indicators are actually looking at. You understand when an indicator says a movement is overbought or oversold, what it's talking about, that you understand it's looking at price levels and historical data and patterns to come up with the idea in a visual sense when it comes to an indicator that, if a line moves a certain way on the indicator, on the RSI, if it passes a certain number, then that means buy or that means sell, that something's overbought or oversold. And there are literally hundreds of indicators that try and represent what we're going to look at on the candlesticks in terms of price levels and movements. So I'm not real big on indicators being the emphasis for your technical analysis. Indicators certainly can be used to see if they agree with you, to maybe solidify what you're already thinking based on what you see on the candlesticks and become part of a checklist of items that you use before you enter into a trade. The thing about indicators is, if it's a day where the market's running in one direction and not the other, because maybe there's big breaking news, the fundamental news maybe is driving the market strongly in one direction, the indicator doesn't know what's happening fundamentally. It's only using technical analysis, and it'll be right every time it says trade in one direction, but it'll be wrong each time it says to trade in the other direction, because it doesn't know to ignore all the false signals. In terms of saying, if the market just keeps rising all day, it'll keep telling you to sell every time it rises enough to be quote unquote overbought, and won't be able to take into account that, hey, there's really big breaking news and the market might just keep running in that direction. So I always think manual methods are better, because the human brain is able to adapt and take in new information better than a pre-programmed indicator. Okay, with that said, if you have questions, comments, please give me your input, give me your questions as we go along. I'm happy to address them directly and also share information that you think might be pertinent to share with others. Charlie, no problem that you showed up late. We're just getting going. All right, so I'm on AvaTrade's website for a reason. I wanted to show you that if you look at under trading platforms, you'll see the AvaTrade Go app. And on that app, you'll see that there are some nice features such as AvaProtect. It protects against losses for defined time periods for a known premium cost up front. And if that premium cost looks insignificant to you compared to the potential profit you're expecting, any losses you'd have during the covered time period are added back. Your only cost is the premium cost. And so it's a nice feature if you expect a large amount of volatility with potential large profits or potential large risk at the same time. AvaProtect's a nice feature, and you can check that out on our app. Also, the mobile app calculates, if you put your stop loss mark on our mobile app, it'll calculate your exposure to your stop loss mark and convert it to your account currency, taking into account your trade size and where you put your stop loss. So before you ever place your trade, the app is telling you what you're risking to your stop loss mark. Same for your potential profit to your take profit mark. So it's a very useful tool for not just beginners, but also for advanced traders that just want these calculations done for them with split-second timing, rather than having to manually calculate exposures and potential profits. It looks like some folks are not having their audio turned on right. Let me just type a message real quick. Okay. All right. Fernando, we're in English. No Espanol. No Espanol in this session. Okay. All right. So check out the mobile app. I think it's very nice. Also, our web trader platform, which is accessed from our main login here. If you log in from this website, you'll get directly into our web trader platform. Most regions now have that available. If you log in and you're straight away in your client area, then let your account manager know that you want the web trader platform added if you'd like to have it. It functions like our mobile app. The order window acts as a trade calculator. It has that extra feature of AvaProtect. And by the way, our mobile app has been rated one of the best in the industry by a large agency that does that rating. So you may check that out. I think it could be helpful for you. All right, so as we go forward, before we do the technical analysis, let's take a look at what is happening on the charts here. And so if we look at, boy, these pop-ups just don't want to get out of the way. If we look at the headlines, you get an idea of what's happening. Wall Street jumps on stimulus hopes, hints of Trump's return to White House. So two positive things have had the markets green all day today. The futures were green all day. The U.S. markets opened green. The volatility index has been up a little. Usually it's down when the markets are green. So you can see there's a little bit of mixed anxiety, even with the positive headlines and the futures in the green and the markets opening green. It looks like maybe a pullback could happen. Why do I say that? Because the volatility index is sometimes referred to as the fear index, and that's been up all day. Not that much, 3%, 4%, nothing like last week where we saw volatility up 10%, 15%. So up a little, enough that all this rise in the market that occurred today, you could expect maybe a technical pullback. You could maybe look for some entry points for that to happen. So a little bit of mixed data here in terms of positive movement, but also fear is up a little bit. Still some uncertainty about things. But the positive movement has come from the idea that it looks like Trump will probably be okay. And in turn, Wall Street says, well, we like his pro-growth, low taxes on corporations policies. And so, when they think Trump's going to be okay, then that's why markets go up, because they view that as a positive thing for the markets, just from a simply selfish standpoint. And then if we look at announcements that came in today, we can see a lot of positive numbers out of the European Union, out of Great Britain, better than expected PMI numbers, and retail sales, etc. So both the pound and the euro have reasons to be stronger today. And the USD has been of late weakening when there's positive news, because the USD strengthens when there's been fear, because it's been acting as a safe haven somewhat. So likely we could look for movement Euro USD, GBP USD, and find some spots where you could get some nice movement with the technical analysis. And so, that's just a brief run through of the fundamentals. We see here's some uncertainty. Others are saying Trump's illness, his recovery is unclear ahead of the election. That's creating some fear. And so some mixed ideas about what's going on in terms of that. So as we jump on my demo account, we'll look at the live movements. We'll look for some ideas about potential moves, potential trades that might interest you from a technical standpoint, understanding that the fundamentals aren't real big one way or another. It's not, volatility is not up or down 8%, 10%, 15%, like some past days where the market was really running in one direction all day. We see that there is some volatility, but not that big. And so we could look for some nice price levels for bounces, maybe for pullbacks, rather than focusing on the potential breakthroughs on the large support and resistance levels that maybe we were focusing on last week. So we look at crude oil. We see crude oil responded as we would expect, climbing with the positive momentum on the market, with what was viewed as positive news, with Trump recovering and potential stimulus out of the US. Then we see the momentum ran out, as would be expected, because it really wasn't huge news. There wasn't a stimulus package passed yet in the US, and Trump was not completely cleared of the virus. And so the momentum died, as you might expect. And so now we've got kind of a sideways moving market right now. And so the idea is, okay, where could I find some entry points maybe? And if we're looking at 1 minute candles, we see the market on crude oil just kind of moving sideways. And so you might start to look at the larger picture and try and find something that makes sense. If we look over here, you see where this reversed from today. You see exactly this line, and I drew this line last week, so it's interesting that it held. We follow this resistance line, and you see that was a support level over here. Support, up, support, up, support, up, breakthrough. Took a lot of momentum to break below that support. Took a lot of momentum to break above it. It took a lot of momentum, look at the drop, to get below it again. So if this breaks through this resistance, you see it hit and dropped. It hit and dropped. So right on that line, if it breaks through, we might see the same way it took a lot of momentum to break below it here and to break below it here. We might see the same sort of momentum if it breaks above. So what sort of news might cause oil to break above this resistance? Any ideas? What if the US announces that they pass a stimulus deal between the Democrats and the Republicans, and the markets view that as positive? Maybe they pass $2.5 trillion stimulus again. This is what brought the market to all-time highs, not just in the US, but globally. Indices were rising the last time they passed a big stimulus deal. So what kind of pending order could you put up here just above this price level, just in case big news breaks and this resistance level breaks through? No, Melps, no. AvaTrade and most retail brokers cannot accept clients from the U.S. So if that's your residency, you can't join with AvaTrade. You're welcome to watch the webinars if you wish. But if you're a U.S. citizen, but your residency is somewhere else outside of the U.S., then likely you can join with us. So being a U.S. citizen is not any issue. It's just whether your residency is in the U.S. Okay. Yeah, buy stop, exactly. Some of you, sorry, I didn't see your responses. Some of you are answering my question from a moment ago. If it breaks above this resistance level, which is clearly significant in the market, meaning look at the bounce. When it hit this price level, look how big that bounce was. Multiple dollars per barrel, or a dollar, I should say, per barrel bounce up. And it took a lot of momentum to break below it with about $1 per barrel plunge here, and even more than that here once it broke below that price level. So it looks like this could be a significant price level, and if it gets above it, here's the next resistance level, up around 40.45. So, we're looking at 1 hour candles. So if we're talking, 50 cents movement on a breakthrough, with only having to risk maybe 30 cents, 25 cents, to your stop loss to get back below this price level, that might be worth setting up. It's a scalp type move. Let me just type, someone's having an issue with their connection. Saki. Okay, so he's having an issue with his audio. I'm just typing a message for him. Okay, so we see it's still testing this price level. So a pending order at 39.8, something like that, could initiate 39.8 would be that it broke the resistance. 39.9, maybe you're more certain. So how do you do a pending buy stop? Like that, change it to buy stop. That means buying from a higher point, 39.9 or 39.8. Okay, there's your entry point. You only get in if it breaks through the resistance, right? Then your take profit could be up here, 40.4 or so, up by the next resistance level. So take profit, 40.4. Stop loss would be if it broke back below that support level again, maybe you give up. So maybe 39.7, 39.6, something like that. Okay, so there we go. About double the potential profit to what I'm risking. Maybe I want my entry point a little earlier. I can just, and this is nice feature that you can just kind of slide things around. And then I don't have to risk as much. I put my stop loss back up where I wanted it. Okay, now I'm risking about 1/3 or a little more than 1/3, a little more than double potential profit compared to what I'm risking. Okay, if it breaks through, try and ride the momentum up. That's a technical strategy, waiting for a small breakthrough. And that's only on the 1 hour candles. So it's more of a scalp move. This is only what, about a 50, 60 cent move to your take profit, to the next resistance level. And so it's something that could occur in a relatively short period of time for you. What else could you look at on oil? You could also do the opposite. You could say, I'm going to do a market sell. So why might I do a market sell when I prepare to buy? Because right now it's just below the resistance. And so maybe I say my stop loss would be at 39.8. Modify 39.8. For my stop loss, my take profit might be the first support level down here, 39.25. 39.25. Okay, so there's a nice little scalp move in the opposite direction. I'm risking less than what my potential profit is, okay? Or near the same, a little less than what my potential profit is. And I'm using this resistance level that's been tested once, dropped, tested twice, dropped. Maybe it's going to test it again. As long as it doesn't break it, we take our profit, okay? And because the fundamental news doesn't seem to be huge right now, the momentum seems to have slowed on the climbing of the commodities like oil and the climbing of the equities and the indices. So maybe it's time for a little pullback. After all, the volatility's up, right? Usually when there's fear on the markets, the equities and oil tends to drop, unless the fear is because of war in the Middle East, something like that, where there's oil producing nations, then that kind of fear can drive oil price up because there's fear of a supply problem. But if there's economic fear, like maybe is still existing right now, that tends to drive oil down. So since there's a little bit of economic fear that shows in the volatility index, we saw it was up about 3%, and it's been up pretty much all day. Maybe it's more likely to pull back than to break through this little resistance on the 1 hour candle, or on the 5-minute candles here. So we'll see. It looks like it's trying to pull back down. And if it breaks through, then we've got our backup on our buy stop ready to go as a buy position. Okay, Fabrizio, just let me know if there's any issue. Everyone has said the audio is good, so you might check on your side if your audio is breaking in and out, okay? Yeah, Georgios, it looks like Trump may be staying in the hospital for a little while longer, but it also appears that he's not in a life-threatening state at all. They're just being cautious. But that remdesivir and some of the other therapeutics that have been used on lots of folks that have shown a lot of promise have really helped Trump as well, from the sounds of it. So they've gotten the fever under control, his breathing normalized, all of that. So it's probably better that at his age and being overweight as he is, that he caught it later on after there's been better therapeutics developed. Because had he caught this 4 or 5 months ago, maybe he'd have had quite an issue on his hands. Yeah, buy stop again, Nandifa, just like this. So how do you set up a buy stop? The reason you might set up a buy stop is you think if it goes higher, that indicates an uptrend. So we found a resistance level right here, an old support level, that if it breaks above that, we think, okay, there must be momentum. And so that's the concept of a buy stop. Programming that if the movement goes up enough that you think there must be upward momentum, and then you buy, waiting for a confirmatory rise and uptrend before you get in. And so that's the idea of a buy stop. How do you open a buy stop? You simply switch from market execution to pending order. You switch to the type of pending order. The type that buys from a higher point is a buy stop, okay? And by the way, in our mobile app, you don't have to know that buy stop is the one that buys from a higher point, or buy limit buys from a lower point. All you have to do is say buy from and put the price, and it automatically makes it a buy stop or a buy limit, whatever it's supposed to be. So our web trader and the AvaTrade Go mobile app make placing pending orders less complicated as well, okay? And the trades will show on your MT4, MT5 platform, but you can open them using the app or using the web trader platform if you get confused by which type of pending order you're supposed to use. Because the app and the web trader, you simply just tell it, I want to buy if it hits this price, or I want to sell if it hits this price, and it makes it the right type of pending order for you, okay? All right, so looks like some promising potential here on both the short-term sell and the longer-term potential for a breakthrough on oil to go up. Okay, so let's take a look maybe at some of the indices. And maybe we'll start outside of the US and look at maybe the DAX and the CAC and see what's going on there. We see the same as the US indices, upward momentum that stalled. Okay, I'm on the 1 hour candles. We see resistance right here. In general, the market has resistance here, resistance down, resistance with a small breakthrough and down, resistance down, resistance down. Then we come over here, it even got close to this and pulled straight down. Now today it came up, tested it right here, and down again. Okay, so this resistance seems to be holding for now. It's going to take some momentum to get through that price level. Again, you could set up a buy stop somewhere above this resistance level. If it breaks through up to a price up here, you likely could see momentum carry it up to the next resistance level up here. Okay, so a buy stop pending order somewhere above this resistance up in this level could pay well. If it breaks through this resistance, it could carry up to the next resistance level, and you'll probably see a similar setup on the DAX, on the CAC, on the Nikkei, on the S&P 500, the Dow Jones, etc. Okay, NASDAQ. So it truly is a global marketplace. Even though the news might be out of the US or China, the major indices all around the world tend to respond. Okay, so I see resistance here. If we zoom in for maybe some scalp opportunities, it looks like a sideways movement right now and indecision. So, if I'm scalping, I'm probably putting my support level on the 5-minute candles close. And when I say scalp, I mean quick in and out, where you're getting in, get a short move, take the profit. That's what scalping means. And so I'm looking at 5-minute candles for scalping opportunities, and I see resistance here on the 5-minute candles and support here. So I might be looking to trade up from this little support level here, trade down from this little resistance level here, just to see if it's going to keep snaking sideways here as the evening carries on. Okay, so you could put a sell limit at a price up here at 28.20. Okay, how would I do that? Very simple. Pending order, sell limit, sells from a higher price. Again, the app makes this easier. You could just put sell from and put the price. 12.820. Okay, and stop loss, if it breaks this resistance, then I'm out. Then it must have had enough momentum to keep climbing. So 12.830 might be my stop loss as an example. And my take profit would be down here before this support, 12.800 even. Okay, so my potential profit then will be 20 full points down, 200 points, 20 whole numbers down, and only 10 whole numbers to my risk, or 100 points. So 200 points potential profit with this pending order, and half the risk, 100 points risk. So my entry point is here. If this climbs to this resistance level right here, then it'll sell, and it'll take profit before the support. 200 points potential profit if it hits my price here, only risking 100 points to my stop loss, and I only give up if it breaks the high point of today right there. Okay, why am I looking at trading within this small range rather than the breakouts? Because there's not huge news right now. Maybe it'll keep ranging, but that doesn't say that you can't prepare for a breakthrough. At the same time that I've got a sell limit, selling from this point here, I could have a buy stop prepared up here in case it does break through. Then I get in on the buy because, hey, there must have been big news if it broke the resistance. Okay, so you can back yourself up with a buy stop up here if you wish. Right now, it's trying to bounce off this support, but it didn't quite get all the way to the support level down here. So I might say, hey, if this drops to 12,800 even, then maybe I buy. Now, it might be too close to put the pending order. Let's see. Pending orders have to be a certain distance away in order to prepare them. So if I want to buy from the lower point, that's buy limit. And I could say 12,800 even. If it hits that price, I want to buy, let's say. Okay, it allowed me. So 12,800, if it hits that price, I buy. So now I've sandwiched this movement in. And I could do the same risk reward setup with the buy limit. So I could come here, put my stop loss at, if I'm getting in at 12,800, I'll put my stop loss at 12,790 and my take profit at 12,820. Okay, exactly the same as the other move, but in the opposite direction. So now I'm guaranteed a trade on this. I'm guaranteed I'm going to get in on this because it's either going to drop and eventually hit my entry on the support level to buy off the support, or it's going to go up and hit my entry to sell off of the resistance. One or the other will happen. Now, there's no guarantee I'll win that trade, but there is a guarantee that one of them will open. Okay, it's a small risk, double the potential reward. Why does that seem technically to make sense? Because there's a support and resistance level there, and the market seems to be moving sideways quite a bit right now. So those little support and resistance levels very well could hold for the time being, long enough to take that profit, hopefully, right? And we're basing that on the fact that the volatility level, the volatility index is not that high, okay? It's just a small bit of volatility today. And so this type of ranging movement could be expected to potentially continue, bouncing up and down. But again, you still can prepare for the unknown headline that could break. What if a headline breaks that says, breaking news, Trump is out of the hospital? What do you think would happen with this resistance level? It'll probably break through and keep climbing. So as much as you're trading now on the ranging movement and on what you know now to be the fundamental news, you can prepare for the unknown by putting a pending buy stop up here, the entry price up here, that if it does break through and hit the stop loss on your sell, that boom, you get in on a buy to ride that momentum. And then that buy position, you'd have your stop loss down here, okay? And the same here, if it comes down, triggers your buy, but it's wrong and it breaks through the support, you can have a sell stop ready to go to sell from just below that broken support to take profit at the next support level, okay? So I don't want to spend all our time on this one asset, but you easily could set up a sell stop below this support and a buy stop above this resistance. So then you have a guarantee of eventually not only trading on one of these buy limit or sell limit, but you're also guaranteed, because eventually it will break one of the, either the support or the resistance, you're also guaranteed to get in on a breakout move, okay? Whenever that might occur. Could happen tomorrow, might happen, might not happen today. But that's what I call putting trip lines in the market. And you're trading on the market moves on what you know now, or the closer entry points on what you know now, the closer entry points being our sell limit and our buy limit, and then preparing for what you don't know, for the breakout moves that could occur with some headline that you don't even know what the story might be that would cause that breakthrough, okay? So I could show you if I'm going to do a sell stop, pending order, sell stop. If my entry point is 12,785, that means it broke the support. Okay, 12,785 means it broke the support. Oh, I put it maybe at the wrong spot. Let me see. Oh, buy stop. You see, I accidentally put the wrong type and it wouldn't let it go through. I want a sell stop, which is selling from a lower point, 12,785. So it's foolproof. And there we go. So now I've got myself covered to sell from the resistance here, to buy from the support here, small risk on each of those, double the potential profit. If it does break the support or the resistance and the limit orders lose, then now we can enter on the momentum of whatever caused those levels to break and take a shot on the breakthrough move, okay? So I've got a sell stop prepared here, and I could prepare a buy stop on the other side. I know I said I wouldn't set these up because I didn't want to spend too much time on one asset, but it doesn't take too long. So if it broke past this stop loss and hit 12,830, 12,831, and I put my stop loss then back down, 12,821, and place. Okay, now I'm guaranteed to get in on the ranging move to try and profit either on a drop off of this resistance or a bounce off of the support, because eventually it will hit one of those entries on the reversal pending orders. And I'm also guaranteed that eventually, even if I win on these, I could win on both of the limit orders, and then eventually it'll break through one way or the other and trigger the buy stop or the sell stop. Okay, so you're guaranteed to get in on the ranging moves, and you're also guaranteed to get in on a breakout move whenever that might happen. Okay, trading on the known and preparing for the unknown. It's all about strategy. Okay, and entering the market at the time that that move is just ripe for entry. Okay, let's look at maybe gold. I think a lot of traders are interested in gold these days. Let's have a look at what's happening. And the same thing, we see the momentum died. Gold was rising because remember, even though the markets were rising today, the volatility was up, right? And the US dollar was weakening. So if the US dollar is weakening, gold is paired against the USD, and there's still some fear on the market. It makes sense gold went up some today. Okay, now we're looking at a little pullback, and we're actually looking at a ranging move. Okay, so here's the support and resistance. Resistance at the top, resistance down, resistance down. 1, 2, 3, 4, 5 times. You had 5 chances to trade off this resistance, right? It dropped each and every time. And here's the support. It tested it once and went up, twice, went up, 3 times, went up. Okay, so you had multiple chances to trade up from this support and down from this resistance. So exactly what we just did on the last asset. Okay, you could do the same thing here like we did on the DAX. Okay, the DAX, we surrounded the ranging movement and also prepared for breakthroughs. So you could put a sell limit from this price here at the resistance. If it comes up, maybe it drops down again. You could prepare a buy limit from the support down here. If it gets near this support area, you buy with your stop loss just on the other side and just on the other side. And then also prepare a buy stop in case it breaks through with some kind of momentum, and a sell stop in case it breaks through down here with momentum. Okay, so buy stop and sell stop entry points might be just below that support if it breaks, and just above the resistance if that breaks. Okay, the exact same idea that we did on the prior asset, but now with gold. And so in this manner, you diversify. You're not only creating a situation where you're trading on ranging movements and preparing for breakthroughs with the technical entry points leading where you're preferring to get in and out, the technicals preparing for entry points and also exit points, but also diversifying across different assets as well. Okay, so this really helps with risk management so that not all your eggs are in one basket, and also you're willing to change on the drop of a dime based on the technicals. And that's what this webinar is about, trading on the technicals. So as much as you might think, no, the market has to keep climbing, there's momentum about stimulus and other things in the headline. Rather than trying to guess the market, the idea of technical analysis is using the technicals to lead your way. Okay, of course, we're taking into account the fundamental news, but we're also looking at the technical analysis, the resistance level, the support level, waiting for breakthroughs, whatever the fundamental reason might be for them. Breakthroughs on the top, breakthroughs on the bottom. So we're not trying to guess the market. We're waiting for the market to come to us. This is where you can take advantage of the market and play the market rather than having the market play you. Wait for the market to come to you with these strategic entry points, with limit orders, buy stop, sell stop, stop orders, buy limit, sell limit, limit orders, taking advantage of the proper entry points, okay? And waiting for the unknown news to trigger the breakthroughs while you're trading on the known news, okay? Very effective strategy many, many times. Let me just stop. Any questions at this point? Good question. Capisa, is there a best time frame to trade during the day? You tend to see more volatility, larger movements after the US market opens and before the European market closes. So when there's an overlap of the US market and the European market, That's when there's the highest volume of trading. And these strategies tend to work very, very well. Now, the US market is open, but the European market is closed right now. And you see the movement is narrowing. You see it, the movement is tightening here. And that's why we're setting up for ranging movements. Okay, so ranging movements maybe tend to work better when there's lower volume of trading. You have maybe less large breakthrough movements. And breakthroughs tend to happen more when you have a larger volume of trading, more volatility. But either can happen at any time. So while there's a difference in terms of time of day and which markets are open or which markets are closed, there's a difference in the movement on the charts. You still can prepare for both types of movements with this type of setup. Yash, good question. Determining where your stop loss and your take profit would be has a couple different ways that you can go about it. One is technically based. So you can see here, we're determining stop loss and entry point based on where the price levels are with our technical analysis. Where's the resistance point? Where's the support level? And that's determining entry point for selling, entry point for buying, where the stop loss should be on the other side of that resistance or the other side of that support. Okay? In general, the technical analysis helps determine those things for you, but also it's personal preference. If you're scalping, right, then your stop loss is probably a little closer, like we're doing right now. If this is more of a longer term move, we might be looking not at 5-minute candles, we might be looking at 4-hour candles. And we might be putting our stop loss not below just one price level, but below 2 or 3 price levels, because we plan to be more patient with the movement and let it run for days or weeks for a longer take profit. Tonight, this evening, we're focusing more on scalping movements because the markets are kind of running sideways right now. It's a good time to trust maybe some of these small support and resistance levels on the 5-minute candles maybe. Okay, but there's no set rule. Many traders are not scalping, and they're not putting their stop loss just on the other side of one price level, as I'm showing here. You might be putting your stop loss below 1, 2 price levels, right? Maybe you also look at this support level down here, and you say, not only will my stop loss be below this support, but also below this one, and so my stop loss would be down lower. And now I'm being more patient with the movement. Also risking a little further, but being more patient. So there's more than one way to go about the exact spot you might prefer your take profit or stop loss. Very good question. Mihai, because of the nature of scalping, it really brings a really large profit potential. So because you're getting in and out quick, especially during when the US market and the European market are overlapping, you can get in and out of a lot of trades with this type of setup. Earlier today, look how many trades you would have won, right? You had a breakthrough, profit. Another breakthrough on the 5-minute candles, profit. Another breakthrough, profit on all these small price levels. Could have been profiting all day on breakthroughs. And by the way, if we were doing a webinar earlier in the day, we'd be looking less at the ranging movements and more at the breakthroughs, preparing only the buy stop and sell stop. Because earlier in the day, when there's a higher volume of trading, you expect more breakthroughs rather than just ranging movement up and down. And so that gives you an idea of how you might adjust your strategy based on the time of day. More ranging movement, like you see here, after the US market closed. When the US market was open, look, it wasn't ranging, it was trending up the whole day. It's a good question, and there's a perfect example right here on the screen. When the markets were overlapped, US market and European, look at the profit you'd be making on breakout moves, buy stop orders. Look at the profit you're making on the limit orders, the ranging movement, the buy limit, sell limit, since the European market closed. Okay? Yeah, when I'm talking about US market hours, that's from New York time, 9:30 a.m. to New York time, 5 o'clock p.m. That's the US market hours. And then European market closed, a couple hours ago. All right, 4:30 p.m. London time. Good questions. Okay, so I think that's enough for this evening. We've been going about 45 minutes. We could look at a number of assets, but we see they're all looking the same. Gold was climbing and now ranging. The indices were climbing and now ranging. Oil was climbing and now it's ranging. So ranging trading this time of night looks to be very good today. But prepare for the breakout moves just in case you have those unexpected headlines. You've got your buy stop and sell stops prepared in advance, ready to take advantage of it. Okay. You're welcome, Bishop. Good to see you attending. All right, everybody. Thank you for your attendance. Go after those profits. It looks like my sell limit, a sell limit up here on gold might be close. If you prepare a sell limit up here, it's almost at that resistance. Or you could do a manual sell for that matter, because it's close. And then if we're looking back at the DAX, let me bring up the DAX again. Still ranging, right? It hasn't reached my resistance or my support, but trust me, it'll get there. It's going to reach one of them. So that opportunity is still there. All right, everybody. Thanks for attending. Till next time, good luck with your trading.